viewers, we'll be going over gold miners ETF ticker symbol GDX. In this video, we'll be going over the day-by-day probability model, how we find the models, and we'll go over where gold miners will head to in the next coming days. So back to the technical analysis. Today we are down 32 basis points on the 1 hour chart. We are still on positive MACD, however we start to see a slight divergence in play on the 4 hour chart. We are approaching to positive MACD as we average higher highs, or I should say higher lows, at this time frame from last week to today. As for the daily chart, we are approaching to negative MACD. However, we may see a possible convergence in play as well. And as for the support level, we are resting on the 50-day moving average, this yellow line. We managed to close around that price range for several days already. And if that support were to break, I do see the next support being the 100-day moving average, which is this orange line. And that is around a price of, I would say, $27.75. And we also have resistance around that, past resistance around that range as well. And since we're above resistance, that now act as our support. And for resistance, if we do manage to make a reversal and head up higher, I do see the next resistance being around the price of $29.60. And if we were to move up higher, that price movement is roughly around, it is around 4.3% to the upside, and to the downside it is around 2%. So back to the day-by-day probability model. So as the days progress, we see a slight favor to the upside as the day advances. In the first 3 days, there's a slight favor to downside. Overall, gold miners makes a recovery to the upside in 7 days. So back to the day-by-day forecast. Again, this model is now available in the link below, so do check it out. So we have 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So which one of these models we should focus on? Ideally, the model that is the best match to the current trend. Right here we have the current trend, and below is the trend that I believe is the best match. This trend dates back to March 1st to May 25th, 2018. So let me point out why these two charts are similar. So what we have here in the beginning of the current trend, we started off below the middle Bollinger Band, and then we proceeded to average above the middle Bollinger Band for several weeks. So we have those trend there. Next, we see it attempt to touch the upper Bollinger Band once more, and afterwards we see it revert back to the mean right near the end. So we have those points right there. So in the trend in question, we start to see a similar pattern as well. First, we start off below the middle Bollinger Band afterwards, so let's just mark that as red. And next, we see it average above the middle Bollinger Band for several weeks. Next, we see it touch or near the upper Bollinger Band. And finally, we have it revert back to the mean in the middle Bollinger Band. So we have those points there. And what we have is 1, 2, 3, 4 points. We also have 1, 2, 3, 4 points. So there's reason to believe if the trends and patterns are the same, the outcome and forecast should be fairly the same. So the model that we just examined was March 1st to May 25th, 2018. Back then, the gold miners was up around 1.2%, so slightly to the upside. If we head back to the day-by-day forecast or day-by-day probability model, it coincides with a 71% chance of gold miners reaching 0 to 4% to the upside. So we do have those models. And on the 7th day, we also have a 29% chance of gold miners heading lower on the extreme case between 4% to 8%. So that is one thing to note. And again, this model is now available in the link below, so do check it out. If you enjoyed this content, feel free to like, comment, subscribe, and thank you for watching.